Well, everyone, it's finally happened. Volatility markets have returned to pre-pandemic lows. And while on the surface that would seem good, the last time we saw such an event, an explosion in volatility, was just around the corner. So as everybody starts to get a little bit complacent on stocks, commodities, and cryptos, what are we seeing underneath the hood? The answer is to go to the options market. We've started to see some rotations that are occurring here into the third week OPEX, the biggest options expiration of the month. And with CPI inflation data just around the corner, we also know that if we see a call wall, which we'll be discussing today, we might need to be paying attention. We've got all of the data. We're also going to be talking about single stock futures. And more importantly, we'll be talking about the rotations underneath the hood that we saw over the last 24 hours. Join us. This will be a good one. Well, welcome back everyone to the Daily Show where we talk about markets around the world. If it's your first time here, welcome. We discuss the macro, leading indicators, and of course, hottest charts on the daily here for stocks, commodities, and cryptos. And make sure you subscribe and smash that like button if you find value in today's video. So the US isn't in a recession. This is the news story that is now circulating everywhere, and everyone's expecting the soft landing. As we know, a recession usually never occurs unless two things occur. Firstly, we need unemployment actually to start to get worse. And it certainly hasn't. The non-farm payrolls last Friday were on another heater. That usually marks the 6-month point before a recession getting called. The other thing that we need to see is uninversion of the yield. Has that happened? We'll take a look at it later on today's video, but you would probably be not surprised when you see the report. Now, what's happening? Goldman Sachs is going down the odds of 12-month recession from 25% to 35%. Now, Goldman's been the most bullish on callings here. Morgan Stanley and a few others have obviously been going more the negative side now for quite a few months. And there's been a lot of disagreement in the field of, investors out there. But where we can't really disagree is when we start to go over and we have a look at the option. So let's have a look at the options market here and discuss the idea of a call wall. So basically, the most hedged event of 2023 moving forward so far has been the OPEX in the next week. Basically, we know the 16th expiration of June has a huge amount of options on it, and everyone's hedging a 4,300 level. So this is basically a gamma call wall. It is going to be difficult for the market to get its head above this zone by too much coming into that. And it does bring us the negative dangers of the market moving forward, especially with mostly CPI in focus, the Fed's interest rate, and of course, on top of that, we also have the monstrous maximum pain level that sits at around 410, which is not the current price at the moment, which is more like 428 on the SPY. What else do we know? Well, we're starting to get a lot of dealer gamma closes as the multi-year high here. And what that means is basically we're getting near those points that we saw very similarly in the start of February to the middle of February. Sound like a familiar time? It should, because it's a very, very similar period and very, very similar kinds of things are occurring. Skew, compression, basically survey reports with everyone going bullish, and of course, a whole bunch of stocks jumping out. And at this point, it seems to be better to trade single stocks, sectors, over the actual indices themselves. And we've been talking about this now for quite a few weeks on the channel. Let's continue to dive a little bit deeper into these stats though. Look at this S&P 500 call option volume. This is actually delivered from Goldman Sachs in terms of where we got the data from. And you can see here that it's massive, 700 billion. I shared this over on our Twitter, follow in the links in the description down below. And this is a massive amount of data. Effectively, this shows us that everyone's getting hyped at a level that we've never seen before. And that should have us thinking, should we be riding this? And then also, should we be nimble and fast? I think trading like a ninja almost in the markets right now might be one of the best ways to go as we approach a critical point. This has always been our extreme zone number 2 on the channel for 2023, and 4,300 is no joke on the S&P 500. This area, everyone's looking at it, and the next 50 points will be pivotal to this market. Let's take a look at the forward PE, 18.02. We updated this recently and actually came down. That's because of better earnings reports coming out of stocks that have everything to do with AI. Now, we know the average for 25 years is 16.8. So is the market cheap right now? No. Is it fair value? It's a little bit high. Do I like it as an investor? Well, not really. I like to buy cheaper price. But This is something that you can bring into your overall philosophy and start to understand that forward PE and specifically getting closer to a 1 standard deviation on either side can have you saying, well, maybe I need to trim my position. And you can see here at the moment, it's just a little bit above the overall average. We will update this chart later on this week, but I just wanted to kind of point out again, we're looking for less bears, we're looking for more neutrality, and we're looking for more bulls. Once you get past 30% on this reading, look at the dates here. 1 year bullish high. Do you see the interest here that I have in it? This is the 8th of February, 2023. We all know what happened a week after that, and it's something that we do use along with the other reasons. Now, in terms of post-election or pre-election kind of years, in this case, it's a pre-election year. We know that markets tend to have a decent period between June and July, and then in Q3, weird things start to happen. We're on, of course, the outlook of are we getting near the point a little bit early? And of course, 4,300 to 4,350 is one of our key zones that we're looking for. Do we have a turn as a swing trader? Absolutely not. But this is an area where you would generally expect swing traders to start to enter the markets in terms of actually showing up in the price action. We also have, of course, a debt limit change. We know that these are the stats from the 1980s and 1990s. Often it's sideways, even a little bit down during the 1990s onwards. So it's important to note that debt ceilings do have a slight impact into the markets. But this is where I think things get a little bit interesting. And it's actually looking at the stocks that have led us out of, let's say, this crash so far. There's no doubt that it is these particular stocks: Microsoft, Apple, Amazon, Google, just to name a few. Then when we put them all together, you'll notice the chart and how it looks like. The great thing about TradingView is you can do this. You can create your own combos. And I just noticed that this is actually approaching a very key pivotal zone. This is usually where you start to see markets tap out a little bit and give us some nice little pullbacks. Now, of course, the pullback may not be super brutal like a lot of people hope, but this is a point where I think it's got to be ultra careful. And I'll zoom in here on the daily just to show you what I'm looking at. These are relatively rare signals. So what it is here is it's like a doji, and a doji. 3 rejections up near the peak. And this type of thing, if you then close below, can instigate swing style positionings and toppings of markets, at least temporarily. This is something I'm watching. We'll, of course, keep updating you on the charts. Have we seen it happen yet? No. What we have seen, or we've started to see, is something that we thought we would get very, very soon. We've been talking about it now for a week to 2 weeks, and more specifically, we saw it start to appear last week. The rotation out of technology as the leader and beginning to go into the cheaper small caps. While we're looking at forward PE of 18.02 on the S&P, it's really all driven by about 10 to 15 stocks. When you look further underneath the hood, there's a lot of deep value. So if you're somebody that's really looking at this as an investment, this is a bull run, this is all looking better. Is the best value in tech anymore? No, it's most likely in the other sectors, IWM growth, and then, of course, certain sectors out there in the markets. We saw skew compression. This is often considered the black swan indicator. It went past 150, then got crushed. That's usually a great sign to beginning to see a swing change of trend. And more importantly, now we need price action and ideally some kind of sector switch. And that sector switch should be going towards defensives. They're like the last 2 pieces of the puzzle. Do we have other pieces of the puzzle? Yes. Put call ratios in the dirt. This is a period of time that we have not seen in a while. Here's the February reading. Let's have a look at the date. Again, you'll see 2nd of Feb. So about 1 to 2 weeks later, the market's actually started to fall off. So this is an early warning sign that everyone's getting a little bit hyped here in markets. And it's fine if you're a day trader, even if you're just holding your positions. If you're an investor, would I worry? Probably not. But this is the period of time where you've got to be a little bit more nimble in these markets. We've also seen the volatility of the volatility, which is VIX, starting to get a little bit of a turnaround. A TD13 was reached here. Previous times this has happened, it's been an early indicator. Usually around 1 month early, we start to get this type of sign, and then all of a sudden the volatility comes out of nowhere in the markets. And it brings us to the video or the actual title of this thing, which is, of course, this sign here. The VIX has returned back to pre-pandemic lows. Now, it's a bit of an unfair comparison maybe to go and have a look at this and then say, well, yes, we got a drop here. But hear me out. The only reason I'm saying this is because remember we talked about the Dow Jones Transportation Index and the Dow itself giving us an incredibly rare signal. In both of those signals, we saw similar periods. 2020, February. The other period it will happen is 2011 during the middle of the year before the sell-off. Now, what it was 5 days down in a row for both of these markets, a very rare event. And in both occurrences, what happened is we saw a squeeze in the markets followed by a sell. Does that sound familiar over the last 2 weeks? We've seen the squeeze, we expect this, and then will we see the sell-off? Well, of course, it's something that we're waiting for, and potentially we're going to see it in the price action. If we don't, then we have to continue down the idea of sector rotation in individual stocks, and of course, the commodities, cryptos, and currencies are all trading pretty well anyway during most of the periods of time. They're a great way to go if you're a bit concerned or confused on the stock market itself. Here's a chart showing us that breadth is improving. We can see here percentage of stocks above the 200-day moving average. Did we just take a double bottom out? Obviously, IWM leading over the last 24 hours. We'll show you where we think that thing will get to a little bit later on today's video. Let's move over to Amazon. It continues to move up. This was certainly one of the stocks we reported on over here as being bullish. Obviously here, for me, that was a great take profit level. If you were going to hold, which is fine because you didn't see any turn points, then the next zone, theoretically for Amazon, should be around 133 to 135. Can it get there while the market kind of, hobbles over? It certainly can. And I think the main reason that any of this stuff is occurring is we're starting to see nice rotation into consumer discretionary. This is the third sector that tends to go in bull market trends. So if we're in a bull market trend, usually start off with technology and semiconductors, then you see the American consumer start to strengthen. In general, though, the consumer discretionary is really being led by Tesla and Amazon right now. So you've got to be a little bit careful. A lot of the smaller consumers are still struggling quite a lot. So I think these are more AI driven, and they're kind of like picking up on the AI craze at the moment. People are just buying calls all out of control on it. In terms of treasuries, we get asked this question a lot. What's your opinion on treasuries? I'm still bullish on treasuries, but not from a trade perspective, more from a multi-month. We're talking 6 to 9 months. I think treasuries will come okay and pretty good, but you've got to remember this is 2011 versus the treasuries versus the S&P. And in general, we actually saw a nice trend towards treasuries then. We need to see treasuries hold certain levels. What about copper? Well, copper continues to kind of struggle around these zones. And if we keep seeing weakness in copper, then we're seeing what we call demand destruction. And basically, it's the market pre-warning us that there is something wrong in the back of the consumers of the world and that we're going to probably see a slowdown. So you're looking for copper. It's an early warning sign. We've been selling copper now for many, many months. And that's allowed us to, if you had a bearish bias on this market, it's allowed you to focus on certain sectors that have been very bearish and more, the way that you should be going. Remember, just because you want to short the S&P on the NASDAQ doesn't mean it's the best play. Short the weakness and technically buy the strength. And at the moment, I wouldn't be shorting NASDAQ if I was you. We haven't seen any turn, but that's up to you. Let's go over here to the S&P 500 and the central bankers. What are they doing? They continuously inject, and you can see here it's one of the best bull cases of the year has been literally the injection of the central bankers. I keep updating you here on the channel. We've still got a lot of divergence between them, and NASDAQ in particular is too extended. But of course, we don't have a turn point yet on the NASDAQ. We'll talk to you about that later on today, where we believe that could be. But it's getting deep red, and I haven't seen deep red like this since realistically over in this area here, November of 21. So it's been a while since we've seen deep red divergence between central bank liquidity and the market getting a little bit hyped. Usually it doesn't bode well, but patience is super hard to have in these markets. So again, individual stocks and sectors, if you have to be in, they're the kind of levels that you need to be focused on. What about the US dollar? Is it still strengthening? Well, it came up to a level, sold off a little bit, and it's at a key zone that we'll talk about later. But we see here that the S&P 500 strengthened with the dollar. That's been a weird occurrence when you go back through the history of the last couple of years. So something that, of course, we are watching. If we look at Disney, here are some of the individual stocks that we've picked up on this week. Disney had a pretty good day, 1.27% coming off the island reversal. Just shows you there are opportunities within the market. You can certainly be bullish with a bearish bias, or have a bullish bias and still be bearish on certain sectors. You just got to pick correctly. And of course, here we've seen Disney run through. I'd like to see Disney continue to get call options on it and then push to 94.25. We saw another 92 plus call 0 DTE come in yesterday. That was really nice. That helped push it up. and of course help that option squeeze that's continuing on here. Another one that was brought up by members of this community in the Monday stream, and I certainly liked it quite a lot, was of course SoFi. Another great day for that, 5.52%. This is a much riskier position, but it has a very good base. Kind of reminds me a little bit of PLTR in terms of the basing structure. We get the island reversal at the back. Incredible demand coming through here. And I've got to say, it's a pretty nice looking position so far. I'd like to see it go up to $8 at least. And then if it keeps going and blasts through and this market goes ballistic, then SoFi traders could be looking at $9.82. You got to proceed with a lot of caution in these because, of course, as you can see, they're on absolute rips. They require consistent 0 DTE options being bought on these particular stocks. What about the defensives? What happened there? Well, utilities had an okay open. They kind of sold off through the day. We're looking for utilities to take this high. I'm going to now put that in. And this will probably mark an incredibly important turning point for markets. I think defensives in general, XLV, XLU, and XLP all have some very interesting levels here. You can see XLV sold off during the session. So what you're looking for is kind of like a final conclusion that maybe the markets are about to turn, is usually these having 2 or 3 decent days. We've had a lot of one-day kind of spikes. We've never really been able to string 2 to 3 days together yet. But when we do start to string multiple days together, which you could do with XLV, but not XLU and XLP, it's just, that's a good kind of sign that things are starting to get a little bit, more interesting. We still have a lot of calls that are open that are sell calls. They're all at 4,300. It shows you someone's pretty confident in being able to hold that wall. So breaks above 4,300 on the S&P. You're looking for small time frame kind of like turnaround points there. And I'm not sure how much further we can get through this area unless we see an absolute explosion in call options that gets us through that zone. At this point, this is what we call a call wall into the next week. Let's look at unusual options activity. What did we have going on? Well, it was pretty much more of the same. We got some nice 90-day plus averages here for Disney, which was fantastic. You can see here the percentages coming through. And some of the notable ones were, I guess you would say, this MSCI Brazilian ETF at 15.44. That was huge. Look at the call option. What is that? So that is a massive amount, certainly a big one. And then, of course, we also see here a huge position being entered into. So both of these markets getting significant market valuations in there, and probably worthwhile considering and at least like going back into and maybe investigating that further in the future. But significant call options there. In the big stocks, I think the big one to be noted was, of course, Coin. So Coin gets hit by, I guess, the SEC. And in general, there was someone that actually had a significant number of puts. Look at the put volume coming through. I'd say a lot of this call volume was retail traders just trying to pick up the dip. But the put volume the day before this was huge. And there was a big position that would have turned a couple of $100K into millions and millions of dollars. So again, watching the options market becomes the most important at this stage. We had another very high options volume day. But I want to show you this. 61% calls. Wow. Okay, wow. That's starting to get up there. And yes, the market was bullish, but in general, that is a significant number of calls. Let's have a look where they all were. So SPY, EWZ, QQ, as we mentioned, all of these ones here. You can see the put call ratios that are going through at the moment. Interesting, 95.5% bullish on Brazil iShares. Wow, that's pretty huge. Let's move over here to the positions. There's the massive one for EWZ, but it wasn't just one. Look at them all. 16th of the 6th, 16th of the 6th, 16th of the 6th. All of these calls are still technically below now the current price of the market. So they were buying them up super hard, and it led to a decent session in that market itself. If we scroll down, though, it was all calls mostly across. Remember, the previous day we had a ton of puts. You're going to keep needing to watch flow here in the market. We've got to string a couple of days together before we see the puts really start to take over. We've seen some signs, but not enough just yet. Here are the individual stocks. No surprises. Tesla and Apple out in front. You can see the expiration dates mostly this week. And then there's a few interesting ones that are coming through for, later dates. Look at SoFi. You can, it's not often in there. So again, just showing you that these calls are coming through. There's the puts on Coin that are starting to come in. And you notice there's a bunch of the bigger traders put puts on Coin. You're better off following them than you are following the little retail traders in general. And we also had some nice Disney moves as well. Disney getting another call on it, as I mentioned, towards that 92. So all these shorter dates are just pushing it up or pushing it down retrospectively, of course, because they're forcing their hedges to come through instantaneously. Let's have a look at the market. It was not a good day for defensives. Utilities, which is probably my favorite defensive at the moment, was flat. And then staples and healthcare were both down. They had okay 5 days, which we'll look at in a minute. And then the best was financials and consumer discretionary. So some nice pickups there through those particular sessions. But really, I think individual stocks were the strong ones. If we have a look at the last 5 days, a nice rotation into consumer discretionary, 4% up. And then we've also seen XLRE. It tends to do quite well over this period of time, even though you'd be like terrified of it. Utilities being one of the strongest defensives along with healthcare. And look at this. Look at tech. Only up 0.14%. When everyone gets hyperactive on something, you know that you're usually coming near the end, or at least a consolidation period for that particular market. Let's jump into some further analysis now. Let's go through all of the hottest things right now. We know that we've come to an important point here for the dollar. And I could make a case for both bullish and bearish here. Of course, I've said this level was bearish, and it was. Then we got this little switch here. And I would say that there will be bulls here. And in these types of positions, you may go, why the hell would you do this? I would usually take a sell and a buy, and then I would break even one of them. So let's say the market goes down to this area here, and I was short up in this area. I would break even my short. And if I had a buy, I'd probably be looking at it here, and I'd break even my buy if it comes up into this level. You'll usually lose one of the sides, but if you know that your particular market is going to pay off, let's say for a 3-to-1 trade, it doesn't really matter. Now, that analysis is really more in my day trading masterclass, which you can check in the links in the description down below. But there's no harm in it if you have seen it before and you know how this system generally plays out. Very critical point here for the dollar, though, and we've talked about this being a massive supply chain, a supply area, and you can see that the market rejected it, then created a long leg doji. So it's basically found equilibrium at this point. It's getting ready for a big move, in my opinion. And of course, you can see here some significant potential traps that are about to occur. Gold had an okay session. It ground a little higher. We're looking for gold to go back into the 1980 zone. Ideally, it would get through 1992, and then it would keep coming up to 2015, which would be the breakout level. So once that breakout, you would expect that highly likely. At this stage, you need dollar to weaken. So if the US dollar weakens, gold should be a beneficiary of that. US oil, not much to say about this one. Came down to this little block here, found some buyers. I'm not really too big on the oil trade at the moment. I've been negative on oil for a long time. Demand destruction, so on and so forth. Usually I'll let it ride the middle of June and kind of, usually find a bit of pickup, and then I'll get back on it. So at this stage, I'm not too sure what this thing will do. If you looked at it on the surface, you'd say, well, it's still rejecting this supply, so it's probably more weakness than strength. But yeah, I'm not sure on the small timeframes yet. I haven't really analyzed it fully. Tesla, what can I say? Call options everywhere. 221, we could be moving into the extreme zone number 2 and pressing that 230. Just got to watch the flow here. This is an extended market now. It's probably getting exhausted, but you can't stop Tesla calls. So when Tesla gets excited and very excited, it goes on epic runs that defy TA. That's why I said at this point, you pretty much should stop looking at TA. And in general, it's just in an uptrend until it isn't. And at this stage, that's kind of holding true. So Tesla continuously sees the buyers for now. We need a proper turn point, and we just don't have one at this stage. And we're not really going to see one until we probably take out, I would like to see kind of it hover for a bit, take a new high, then go down. Then we can look to short it. I still remain at 145 in the future, though I'm not really skinning the game on this because I do think that Tesla's going to come under a lot of scrutiny over the next earnings reports, but we'll find out. Apple, the canary, it releases the $3,500 goggles, which, by the way, I am interested in checking out and trying. I mean, this could be a defining product of the future, but $3,500 obviously is the first price. They'll reduce it over time. I could see it being used quite heavily in the future, especially in countries where they're going to have less land and less opportunity for space. But looks interesting. I haven't really enjoyed VR so far, so will this thing be better? We'll find out. Overall, Apple stock hitting an all-time high. I'm looking for it kind of to find one last boost and then maybe start to sell. This is the type of level where you generally see big turnarounds. because it's at that critical level where it hits the news. Everyone's talking about it. Goggles coupled with new Max, coupled with good news stories, and the market's already put good news in. Don't worry about that. And then all-time highs. Everyone's excited about it. I'm sure there's lots of mums and dads out there buying their Apple stocks. That's usually the time you don't want to. I mentioned it a little while ago that I thought that probably around here you'd see a bit of reduction in funds. And I'm sure that a lot of funds did scale back. They always hold portions, of course. And yeah, at this stage, we're looking negative, but we'll see. We haven't got a proper turn yet. The DAX, right on resistance. We'll find whether it can actually weaken off. 2 hours here for the European viewers. You can see it's kind of found some weakness with the higher high. It needs to short pretty much right now if it's going to. We'll find out. The Australian market, been very correct here. Continue to see weakness here. Demand destruction in general hurts this economy because, of course, we have higher interest rates. The AUD is also potentially going up a little bit, which hurts the exports. And then on top of that, I understand Australia pretty well, obviously being Australian, but on top of that, we've got demand destruction through metals and oil still. So as long as that keeps picking up, I could see Australia going to 69.50 relatively easy for the XJO. We'll find out whether it keeps doing that. Now, the US2000. So that's a pretty strong breakout. Looks like we're going towards 1896. Wouldn't be surprised at all to see the Russell continue its bullish move. It got a lot of puts on it down here. I was kind of hoping for one last roll like that. That would have been pretty sweet. But if you didn't get it, don't worry. There's always another opportunity. At this stage, it is coming in very, very soon to a problem. So as we marked out in the previous video, we're looking at probably around a 2% move before it comes into some issues. But this is, yeah, pretty nice. Good breakout. Obviously shows us some breadth coming through the market. And look, there's a lot more upside in these particular stocks than there is in, let's say, maybe technology. You don't usually want to buy terrible stocks and then hold them as investments. But if rotation is going through, these are the sectors that you start to look at. Let's go over here to the weekly on Qs. It's a very extended market, but extension alone will not stop it. All we know is that we're very far away from mean reversion. So as an investor, I would not like this level at all. As a trader, well, momentum is still on your side, and we haven't seen a turn point other than very small timeframes here on the NASDAQ. Here's the US 100. You can see a little bit of a red resistance zone where I've marked out some previous daily levels. So we're in that kind of little bit of resistance. We've marked 14,212 as a swing turn point, but we have not seen that. So we're just kind of sitting, chilling at the highs here with a lot of calls going into the market. Dow floating around, boring chart, but anyway, it's there. And then the S&P 500, this is the one that's interesting. 4283, nice little pickup. Actually came back to the zone we talked about in the previous video. So it's kind of now it needs to short. Now, if it keeps taking a high, remember next week's the important week here. So if we keep taking a high, we want to actually steal that. So I would mark in something around 43.25-ish, 23. And then if we actually take that high, because we've built some base here, if we take that base, we should be on for a swing. So again, do we have signs of turnaround? Well, let's look at the futures market. And you can see I actually priced all of this up before it happened. Most of this was done here. So there are some signs that this could be where sellers are. Now, I only know that these usually work about 50% of the time. So you might say, well, Tom, that sucks. 50% sucks, man. Well, it's because you're counter trending. Counter trending is difficult. So you have to make it pay at least a 2-to-1, and then that pays off. Now, I know that there's a 43.04 gap fill still to go. So it is very plausible markets will take a new high first. And I've got a little bit of concerns about that in this trade. There are things that sniff kind of badly. Even when it came to this area, a lot of people probably celebrated that, shorted it. They'll smiley face thinking how good it is. And now they're sitting there on their buy zone again saying, this is a bit scary. Yeah, it probably is. If we go down to the 15-minute chart, which a lot of you do request, let's have a look at the 15-minute chart. You can kind of see here, all right, well, we've made a little base through this zone, 42.85. We need a new low, at least in the session. We're kind of looking for it to hover into the session itself. And yeah, we do need, of course, this level to be broken. That's going to be significant if it does occur. And that should hopefully lead us to the take profit style ideas. If it's going to short, it needs to short here. Otherwise, mark out the new high, C43.04, see how it reacts to that zone, and then go from there. But yes, at this stage, there's only the first time frame change of trend, which is when we made that lower low. There is no significant swing turn yet in these markets. And I just need to reiterate that At the moment, probably the best positions have been single stocks and looking for those kind of like turnarounds on stocks that have been underappreciated, such as Disney and such as some of the others we've seen recently. When we go to the 16th, what happens? Well, take a look at this. We get to maximum pain 410. We're currently trading at 428. Now, this, of course, can change, and max pain is no guarantee like anything, but you'll notice that we have some fight zones between the call buys and the puts, 420 and then 410. And in fact, calls and puts are pretty equal on these levels with a lot of calls above it. Now, 430, 440, 425. We looked at the start of today's video. We saw that 430 is a very impenetrable wall moving forward and a tough zone for it. So if the options market has its way, anything here should be faded. And of course, we're seeing that with that gamma strike that I showed you at the start, where basically it's sell the rips and buy the dips according to the options market at this stage in terms of hedging. So watch the options, watch the 0DTEs, come back to the channel. We'll be following it very quickly and of course closely here as much as we can. Let's move over to Bitcoin. What's going on with Bitcoin? It has found an interesting level. Now, we actually found a super boost off Bitcoin. It loved it. It was like, yeah, it doesn't really change my opinion. I still think the weakness will ensue here on Bitcoin. You can always be wrong, but in general, even with this huge bullish candle that you'll go, wow, that was huge. It did stop at least at this point in the supply. This is a very heavily traded level. You'll know I've marked two big, massive traded levels. So if it's going to sell, it needs to sell again here. The daily closed below all the previous days, which theoretically should be weaker. And closes matter. So yes, okay, we saw a low. I can understand why it would squeeze back up with so many people shorting it. And we see that lower low point. This is a significant buy on the session. If you were day trading it, I wouldn't have blamed you at all for probably taking it around here though. And now we've seen a small switch of trends. So I would like to see the shorter time frames find shorts here again on Bitcoin and continue on down. Let's move over to the calendar moving forward. What have we got coming up this week? Well, we need to scroll forward a little bit more than this. Let's do that now together. Okay, here we go, the 6th. And as you can see, we have a few bits of information, but not that much. Unemployment claims on the Thursday, but it's when we scroll into the next week, we should be starting to go, whoa, okay, here we go. Core CPI numbers, Tuesday, June 13th, the most hedged event of the year. Then we come into PPI, then we come into a cracker of a week because we also get FOMC funds rate, press conference. Will they raise 25 basis points? Economists say no. Obviously, they may, and that could freak out the market. Then we've got retail sales. And then to top it all off, we also have a whole bunch of Bank of Japan press conferences and other massive central bank conferences. This is a big week, and we've got OPEX as well. All of those options expiring, 3.5 million of them. That's trillions of dollars. It's going to be a big event. And I expect next week to really define this 4,300 zone as much as it can do. And we hopefully see a large spike in volatility based on everything else we've been seeing and the VIX as well. If you enjoyed today's video, remember to subscribe and smash that like button. Massive shout out to each and every one of you. Thanks for being a member of the community. You can also get some free trading cheat sheets if you're interested. Follow us on the Twitter. And of course, check out anything else in the links down in the description down below. The Linktree one will take you there. Thanks so much. Catch you for now.